Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is October 16th. Nevada-based company Blackrock Silver has released some exciting news out of their silver and gold project Tonopah West. A recent updated mineral resource estimate has seen a significant increase from their maiden resource estimate conducted last year. VP mining analyst Taylor Combaluzier is here to provide details on the story. But first, Timothy Lee, mining analyst, has some updates on Canada Nickel Company's recent feasibility study out of its Crawford Nickel Sulfide project. So with that, Tim, what's top of mind for you?
Hello, and thank you for the warm welcome. This week, Canada Nickel Company announced results of a bankable feasibility study for its flagship Crawford Nickel project in the Timmins area of Ontario. Canada Nickel Company is CNC on the TSX Venture Exchange. We have a buy rating and a $3.60 target price on the stock. CNC is a Red Cloud investment banking client. The study contemplates a 41-year mine life starting at 60,000 tons per day during the first 3.5 years and ramping up to 120,000 tons per day. Initial capex totals US $1.95 billion, with $1.6 billion additional for the ramp up to the higher throughput rate. All amounts here are in US dollars. Annual nickel production would average 38,000 tons per year for total production of 1.6 million tons of nickel over the mine life. C1 cash costs would average 39 cents per pound nickel and an AISC of $1.21 per pound on a byproduct basis. The project would produce both nickel and iron concentrates. The nickel concentrate would average 34% nickel, with additional cobalt and PGMs ranking it as the highest grade nickel concentrate in the global market. The iron concentrate would average 55% iron with additional nickel and chromium, making it suitable direct feed for North American steel production. Nickel recovery is projected to average 41% over the mine life, with 48% over the first 3.5 years. The 41% is 4 points better than in the 2021 PEA, reflecting the optimization work the company has performed over the past 2 years. Using $9.53 a pound nickel, the study yields an after-tax NPV 8%. Of $2.5 billion and an IRR of 17.1%, with a 5.6-year payback period. This increases to an NPV of $2.6 billion and 18.3% IRR if it includes the carbon capture and storage tax credits. Utilizing the company's IPT carbonation process, the project would store 1.5 million tons of CO2 annually during a 27-year peak period. This would result in a net negative carbon footprint per pound of nickel. The study is based on a proven and probable reserve of 1.7 billion tons, grading 0.22% nickel, 0.013% cobalt, and 6.44% iron. This is derived from an updated resource estimate that more than doubles the total size from the 2022 estimate. According to CNC, this would be the second largest nickel resource and reserve in the world. Compared to the PEA, this feasibility study contemplates a substantially larger project. The 41-year mine life in the feasibility study is significantly longer than the 25-year life in the PEA, although we note that this is also reflected in the higher capital costs. Looking forward, CNC is actively pursuing a financing package for the project starting in mid-2025. Permitting is underway, with final permits also anticipated for mid-2025. And if everything stays on track, production is anticipated to begin in 2027. In our view, this feasibility study is a substantial positive milestone for CNC and its Crawford project. The updated resource estimate represents a major increase in size for Crawford, and this contributes to the substantially larger scale of the mine contemplated in the feasibility study versus the PEA. As well, the company's efforts in metallurgical improvements and IPT carbonation are reflected in the positive project economics. While there are higher initial capex and per ton operating costs, in part due to inflation that has been seen across the industry, the net is positive economics for a major-sized project. Taylor, on to you.
Thanks, Tim. This week I'll be speaking about Blackrock Silver. We have a buy rating and $1.60 target price. Blackrock is a Red Cloud banking client. Blackrock announced an updated mineral resource estimate for its Tonopah West silver project, which outlined inferred resources of 6.1 million tons, grading 243 grams per ton silver and 2.9 grams per ton gold, for contained metal of 100 million ounces of silver equivalent. That works out to 47.7 million ounces of silver and 570,000 ounces of gold. This represents an increase of 135% from the 42 million ounces of silver equivalent outlined by the maiden mineral resource estimate, and approaches the upside case of our latest mineral inventory estimate of 106 million ounces of silver equivalent. The higher tonnage from an updated geological model drove growth. A new geological model based on structural reinterpretation combined with data from 25,000 meters of drilling in 2022 increased the tonnage at both the Victor and the DPB veins by 29% and 130% respectively. The Northwest step-out inclusion added 11.9 million ounces of silver equivalent in contained metal as well. Combined with the Victor and DPB areas, this inclusion more than doubled the footprint of mineralization to over 3 kilometers. We continue to believe there is significant future expansion potential. The mineralized system at the Northwest step-out area remains open along strike and at depth, boding well for future expansion drilling. Additionally, infill drilling could favorably affect grade here as the holes are more widely spaced than in the Victor and DPB areas. The resource is backstopped by 125,000 meters of drilling. Since acquiring the option on Tonopah West in April of 2020, a total of $29 million US has since been expended on exploration, implying a discovery cost of US 29 cents per ounce silver equivalent. We do view this mineral resource estimate update very positively, as it represents a significant increase in the mineral resources at Tonopah West and could form the basis of a future PEA. Now more than ever, we believe Tonopah West makes Blackrock an attractive takeout candidate given its large, high-grade resource in a world-class mining jurisdiction. At the time of recording, Blackrock is trading at a discount to its peers at US 35 cents per ounce silver equivalent versus peers at 73 cents per ounce. We feel that ounces delineated at Tonopah West are likely worth more than ounces delineated elsewhere and should command a premium given that 1, the project is located in Nevada, which in our view is one of the best mining jurisdictions globally. 2, it is favorably located near key infrastructure such as highways and power lines. And 3, the resource area is located exclusively on patented mining claims. And lastly, we expect these ounces to be higher grade than what is typically seen at peer deposits.
Thanks for listening to the Red Cloud Research Roundup podcast. We hope you enjoyed this dive into recent notable mining news. Remember, you can join us every Monday for new episodes, and as always, you can head over to redcloudsecurities.com to access our research portal, to read full disclosures, and to sign up to our email list. That's it for this episode, and see you next time.